This video will cover question 3 from your quick study chapter 4. It says prepare journal entries to record each of the following transactions of a merchandising company. The company uses a perpetual inventory system and the gross method. So again, using the information we had from our Canvas, this will be basically based on what you did for course activity 6, the perpetual journal entry, so you can use that format to help you with completing question 3. So we purchased 900 units of product at a cost of $10 per unit. Terms of the sales are 410 and 60 invoices dated November 5th. Keep in mind that we're using a perpetual system since we are purchasing. This is from the buyer's perspective. So this is MSK Inc. from the course activity item. So we're going to debit the merchandise inventory account, and because we're given terms, you can assume it was on account, so that'll be accounts payable. Since we're using the gross method, we want to go ahead and recognize the original price. So I have $10 per unit, 900 units, so that's a total of 9,000. Just multiply the 10 by the 900 units to get 9,000, and that will be my debit and credit. And again, the credit should have gone to accounts payable. Then we record our entry. Move on to the next one. We return 35 defective units from the November 5th purchase. Now again, we paid $10 for it, so I know 35 times 10 is going to be $350. Now because we returned them and we originally bought them on credit, we're going to debit our accounts payable. We're going to decrease our account for the amount that we are returning, because of course we're not going to pay for those, right? Because we gave the merchandise back. And then we're going to reduce our asset, our merchandise inventory account, by crediting it for the same $350. And then we're going to go ahead and record the entry. And then it says on pay the amount due from November 5th, purchase less the return on November 7th. So since we bought 900 and we returned 35 of them, we want to figure out how many do we still owe. An easier way to do this is go ahead and do a T account. So after posting the 9,000 to the accounts payable account and then debiting the $350 for the returns, the balance in the account will be the 9,000 minus the $350. So we're at $8,650 is how much we currently owe this company. So what we're going to do is we're going to debit accounts payable for the balance that is owed, and I'm going to skip a line, and I'm going to credit the amount of cash that was paid, and the difference will be the discount that we received for paying it within the 15, or how many days was it? We have 10 days to pay it, so the Ford represents a 4% discount of paying the balance within 10 days of the invoice date. So since it's November 5th, 10, so the 15th will be the last date. So on November 15th, we'll be able to recognize, and of course it just fixed it for me at it. So smart, computer, so smart. And with the cash, skip a line. So my discount is going to offset the price of the merchandise. So I'm going to go ahead and include that on my second line, and it's not taking it. Let's see, merchandise. Click on that and then credit the cash. Alright, so how do we figure out the amount? So we're going to take the 8,000, so the $8,650, we're going to multiply that 8,650 by the 4%, so 0.04. That's not a fraction, that's see your textbook reading for the terms defined, and then you're going to get $346. That will represent our purchase discount. And then we will take the gross amount of $8,650 minus the discount of $346. That difference, the net, will be the amount net cash paid. Alright, so we'll use the $346 for our discount, and we'll use the $8,304, and our total balance will be gross amount $8,650, and that will give us the amount for our journal entry. And score answer, and we are done with question 6.